Oh, it's come back now. I've got my microphone on. Hopefully someone can hear me. Hello, hello, hello. Brilliant. Fantastic. I've absolutely no idea what that was about. I think you could see the screen. I could certainly see it on Anna's side, but we had no audio. Brilliant. Thank you very much indeed. Thank you, everyone. Wonderful. I will move that. So what was really odd was that in the chat here, the little microphone symbol had gone completely as well. So that had disappeared. So I don't think it was anything we did. Anyway, for a change. Yes, for a change. Hey ho. Technology, don't you love it? Right, where are we going? Let's start with the CSI, multiple CSIs. I've got this on 3, 5, what's this one? I think this is 10 and 15 minute. So what we're seeing at the moment, some strong selling on the British pound, the yellow line, falling strongly, rolled over here, and we've got decent selling over here as well. Lots of opportunities for reversal. What's interesting right now is that these three, the commodity currencies, the New Zealand, the Canadian, and the Aussie, they don't always, but quite often they will follow one another around relatively closely because obviously they're all risk currencies, because they're commodity currencies, etc., for all those reasons. So you will tend to see them following one another around. And what's interesting right now is the fact we're seeing strong buying on the Canadian dollar coming in here. And that might well be a precursor to a rally in the New Zealand dollar, this grey line, and potentially in the Aussie. The Aussie is very, very beaten down at the moment. And as many as you know, the way I like to trade, I like to look at reversals because I'm a greedy so-and-so, and I like to get in early. I'm quite happy to put more risk on the table because that's what it entails. But that's my preferred, certainly one of my preferred ways to tactics to the market, is to always be looking at reversals, because if you get in early, you're going to maximize the profit from any reversal. It does mean you have to be patient. It does mean that you have to lay more risk out because your stop loss has to be that much wider. But in terms of getting into the trade, you are getting in before the trend has developed, and therefore you're going to maximize whatever it is you can from that particular trend. And if I take an example of the pound right now, which is falling nice, as I say, pound CAD, that would be a nice trade. We've got crossover here. We've got it starting to cross over here. It's developing nicely here, and it's just starting to develop over on 15. So that's rippling across the time frames. Don't even need to look at a chart. If you're jumping on that trend as an existing trader, that's fine. But obviously what you've given up all of this move already. That's already been and gone. You can't grab that back historically. You've lost that. So you're jumping onto a trend that's underway. Whereas if you decided to get in early at the top here, yes, you've got to be a little bit patient, although in this case it has actually moved pretty swiftly, primarily because we're into the London Open and we're always looking for reversals at that particular time. Other times you may have to be more patient. For example, if you're looking at the Aussie dollar as a potential reversal, you know, the dollar is still climbing, the Aussie is still falling, but at some point that is going to reverse because it's so beaten down. It's getting up into overbought here, it's not quite into overbought here, and it's deeply into oversold here in terms of the 15 minutes. So at some point, you know for a fact that is going to reverse. If I go on to, I think I've got the Aussie dollar on the time frame charts. There we go, this is what we're looking at the moment. So, you know, this has been developing nicely. This started around about 6:30, 7 o'clock when we were just getting all set up, ready to go for the webinar. And it's been falling ever since. You can see this is on 50. I've got 15 seconds, 3 minute, 5 minute across the top, 10, 15, and over onto the daily. What's interesting about the daily, I've just popped this up. The Aussie, not so much the Aussie dollar, but certainly the Aussie per se, and particularly the Aussie yen has been rampaging higher. Certainly the Aussie yen has. And it's no surprise to see it coming off, particularly in terms of this particular pair. Just pull that up a little bit. There we go, just to make it a bit more demonstrable. Yesterday's volume was pretty lightweight, not in disagreement, but certainly the price action was relatively narrow, but the volume was falling away, certainly in the context of what was going on last week. It's not to say it's going to be reversing dramatically from there, but certainly a little bit of weakness, profit taking coming in, etc., etc. So what we're seeing at the moment is this move lower. It's been developing nicely, but the question now is, do you want to jump into this as a trend, maybe grab a few pips in what's left of that particular trend lower, or are you now going to take a reversal position? As you can see, the trend monitor highlighted earlier on Anna's system, it just gives you that confidence to stay in a position, and when you use it in multiple time frames in this way, it's even more powerful. You know, this is very clear. We're in red territory, bearish, 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 right the way throughout, up to the 15-minute and probably beyond. That's what we're seeing right now. Now, at some point, that is going to change, and there's going to be a reversal to the upside. We've got good volume coming in here. This is on 15-second, remember, so this is pretty swift. But at some point, this is going to transition through into maybe a darker color, darker red, into darker blue, maybe out the other side into bright blue. This may well transition through to the 3-minute. If it's a true change in trend, what will happen is that color change will move across the time horizons. It'll start in the fastest, and it will gradually ripple through into your slower time frames. And if it is a true change in trend, in other words, from a primary to a primary, in this case, from a bearish to a bullish, then that will transition through, and these colors will change slowly. You can start to see, we're maybe seeing a little bit of a transition here already. It hasn't changed here, you wouldn't expect it to, and certainly not over into slow time frames, but gradually over time, that is what we're looking for the whole time. We're looking for that transitional change in color to ripple through. You're starting to see it here, as I say, and that may well ripple through over here. But in terms of a tactical approach, if you're now looking at a reversal opportunity, let's go back to the multiple time frames. What are we looking at? Just spoiled for choice, really. You've got the Aussie down here, you've got the New Zealand, you've got the up at the top, you've got the dollar and the Swiss franc. Just go onto the currency indices, see what's going on there. In terms of the charts themselves, this is on 5 minutes. So this is the yen, the dollar, the euro down here, and at the bottom we've got the pound. That's the selling we're seeing at the pound right now. This is what we're seeing in terms of the dollar. It's rising nicely in terms of 5 minutes. There's lots of buying. This is what we're seeing in the yen. It's a little bit flip-flop. What's interesting about the yen right now, if we go onto the indices, let's just see what sentiment's telling us in terms of index trading. And what we've seen over the last, certainly in the last sort of 24 hours, there's been a little bit of a disconnect. Generally, you expect to see, if indices are rising strongly, which they have been, then you expect to see the yen selling off. But we've actually seen the yen selling, certainly in the last few hours at any rate, and over that period. So there's a little bit of a disconnect between what we're seeing in terms of sentiment and what we would expect to see in terms of the yen. And in addition to that, we had it the other day as well, where you see the yen pairs roaring higher. In other words, very strong yen selling, and yet the indices were not moving that strongly. And in addition to that, we've also got the VIX. Just pull the VIX over here. Got this up here. Let's just pull up the right chart. Where are we? Yeah, there we go. Let's just move that over there. This is what the VIX is doing at the moment. Let's just put that onto the daily just to give you a context. There we go. The VIX is still at 26, and yet the indices are climbing. The NQ is about to maybe break into 10,000, which you know, we're getting into new high ground, etc., etc. So you have to bear in mind that, be aware of these relationships are not cast in stone. They're not something that you can say 100% of the time, this is what is going to happen. You know, correlations come and go. It's something we cover in huge detail in the Forex trading program. The relationships are there, they do exist, but they are not something that you can rely on and say categorically, this is what is going to happen. If this goes up, that's going to go down, and so on and so forth. So always be aware that you have to have that in the back of your mind, that you know these correlations do come and go, they do break down. Just be aware of them. Just understand that you know, from time to time they are going to break.
And sometimes the
And as Anna said, the Forex market does often lead. What you see going on in the, let me just go back to the charts. What you see going on in the Forex world is often a precursor to what is likely to happen in terms of sentiment. So if you see something, if you see one of these correlations has maybe disconnected or broken down, it is often the precursor to something happening in related markets. In other words, it happens first in Forex and then it moves across into the sentiment, the broader sentiment in other markets. So just be aware of it. We've gone through the London Open. Let's just pop this up to 10 minutes. Let's see what's going on. We've got, as you can see here, we've got good volume. That's what we expect to see. Excellent volume. It's, you know, as we go through London, you expect to see the volumes increase. It is a natural reaction to a session change. So we're still moving lower on that one. How much further have we got to go? Let's go up to 15. Breaking away from the volume point of control. You saw the injection of volume here. You know, these are classic candles that we reference a lot. When you're in a downtrend, these are particular candles and particular phases of price action that you want to find all the time, because what this is telling you, we've had an injection of volume. The market is weak. It's tried to rally. This is heavy selling in here. The market makers are selling into weakness. They're pushing the market up, trying to draw traders into weak positions, into reversals, into a rally, potential rally, bang, and down it goes. So you're seeing a huge amount of selling in this candle. In other words, a continuation of the weakness that we've seen so far. And you'll see these in all time frames. You'll see them from 1 minute to the dailies and so on. It's an effort to rally in what is already a weak trend. The volume comes in, it drives the market higher, you get a wick to the upper body, the market closes somewhere near the open. It can be lower, it can be higher, it doesn't really matter on the body of the candle whether it's green or red. The fact of the matter is it's volume associated with the price action. It's a clear anomaly, because if this were not the case, if this is heavy selling, if this is heavy buying rather, then you would expect to see this to be a widespread up candle. It's not. You've seen the pressure come in here. It's what I refer to as a water-filled balloon, to use that analogy. You're filling a balloon with water. You've all done it, I'm sure. And gradually it gets heavier and heavier and more elongated, and eventually it bursts and the cascade of water comes out. It is that principle of, we call them price waterfalls, because that's what they are in a